right. Hello, everyone. Thanks for being here. I'll give about 30 seconds to a minute or so for some last minute people to join, and then we will get started. Okay, let's get into it. Well, thank you guys for being here. I know it's some of your all's lunch break, so thanks for taking the time to talk about this topic together. So my name's Alexa Ferguson. I am a real estate agent with Good Neighbor Realty. I'm also an investor myself. So we have a portfolio we own 4 short-term rental properties. Some are in the Denver metro area, one is in the mountains, and then we manage 4 more short-term rentals. So managing a portfolio of 8. So yeah, that's a little bit about us, and I'm excited to talk to you guys today about how to leverage your home's equity to purchase an investment property. Okay, before we dive into all the good stuff, I wanted to talk a little bit more about who we are. So Good Neighbor Realty is a boutique real estate brokerage. We specialize in helping our clients purchase vacation homes and investment properties, so short-term rentals specifically. We help clients buy everything too, primary residences, all of that good stuff. But we specialize in the niche of short-term rental really because you just get the best return on your investment with short-term rentals right now as far as properties that can be rented out. It's the strategy with the highest yield. So that's why we are deep in that niche. And because of that, we offer tons of resources to our clients. It can be overwhelming to get started. And so we provide lots of resources. Here's a brief overview of all of those. AirDNA Access, that's like a software to analyze short-term rental like revenue data, vendors and contractors specific to short-term rental, mid-term rental. We have awesome monthly networking events. So if you're looking to get into the investing world, look us up, go on our Instagram, go on our Eventbrite, or reach out to me. And we have awesome monthly networking events. We have legislation guides for like where you can do short-term rental, where you can't, what the specific rules are, hosting automation guides, property analysis tools like performance calculators, all that good stuff. So anyway, all of this to say, we are here to be a resource for you. And that will be sort of a theme throughout this presentation as well. So if you need any of these resources, if you're curious to get in the game, reach out to me. I have put my contact info in the chat. So if you want to connect afterwards, or if you have any questions, there's my phone number, my email, and my calendar link. So feel free to utilize that. Okay, let's get into the good stuff. So today we're going to talk about how to leverage your home's equity to purchase an investment property. Before we get into how to do that, I think it's important to talk about why we're even talking about this and why it's important to understand. And it really comes down to the fact that building equity is really where the big time wealth building happens in real estate. I think a lot of times investors will get caught up in cash flow and really only focus on that when evaluating a property purchase. But equity is really where the big wealth generation happens. And so we like to, in my personal investing, and I always encourage clients to look at their real estate portfolio and purchases over the long term. So real estate is really, savvy investors will understand that real estate's really a long game type play. Buying and holding properties is really where you can build the most wealth. And then it's a great way to acquire an investment property or a vacation home without having to fully rely on other funding sources. So spending your personal savings, doing traditional loans, interest rates are really high right now. And then also putting your equity to work for you. So Maybe you've been in your house for 10, 20 years, or maybe you've done major renovations and you're sitting on all this equity. Well, maybe you can use that equity and put it to work for you instead of just sitting there and put it into a cash flowing asset, and suddenly your equity is making you more money. So it really can be a powerful tool. Okay, what is home equity? So simply put, home equity is the difference between the current market value of your home and the amount that you still owe on your mortgage. So it's the portion of your home that you own outright. Okay, how does home equity grow? So there's a couple main ways. The first one is your mortgage payments. So each monthly mortgage payment includes a portion that goes toward your principal balance, which directly decreases the amount you owe and therefore increases your equity. That principal, the amount of your monthly mortgage payment that goes toward principal, is devastatingly small in the beginning, but it grows over time and you can always contribute more to your principal. So the more you contribute to your principal, the more equity you have in the home, the bigger slice of the pie that you own. Second one is home appreciation. So when the overall market value of your home increases due to factors like neighborhood development, economic conditions, or general market trends, your equity also grows. Colorado tends to be a state with really strong appreciation across the state. And it really peaks in like the most desirable areas. So Denver Metro, ski towns, things like that. But appreciation is really solid across the state, which is why it's like such a great place to invest here in Colorado. Appreciation has been sort of interesting in the last few years. If you've owned property in the COVID years, your property values absolutely skyrocketed. If you're buying during that time, you maybe remember offering like 100K over asking, offering up your firstborn child to win a property. And so during that time, home values really jumped up. Appreciation was like soaring. And then since then, since interest rates have spiked up to like 7%, appreciation slowed down a little bit. And I wouldn't say that many properties have gone down in value, but many have just held steady for the last 2 years or so. So it is a little bit of like, you know, there's a lot of market conditions that come into play, but generally, if we look at a longer chunk of time than just the last crazy 4 or 5 years, appreciation in Colorado is really strong. So that's another way that your equity just grows without you having to do anything. And then the third one is improvements. So making home improvements that add value to the property can further boost your equity. So adding bedrooms, redoing your kitchen, building an ADU in the back, all those kinds of things will force appreciation. We call it sweat equity sometimes, but they increase the value of your home and increase your equity in the home because it increases the top end market value. So calculating equity, calculate your home equity, subtract your current mortgage balance, so how much you still owe, from the current market value of your home. It may be easier said than done for the average Joe to calculate the market value of your home. So I'm happy to help you do that. It's helpful to have MLS access and lots of market knowledge being in this every day. So if that's something that you need help with, just shoot me an email and put in the subject heading something like free property valuation or something like that, or calculate my equity or something so that I know that that's what you're looking for. And I'm happy to do that with you, just so you can get a sense for like how much equity do I actually have to work with here roughly. Okay, equity growth over time. I really like this. This was presented to us by a lender that we work with all the time, Jessica Connie. She's with Aslan Home Lending. But this graphic does a really great job of illustrating how your wealth can grow over a span of, in this case, 10 years, with those factors that I was just talking about on the last slide. So I'll explain this a little bit. So I don't know if y'all can see my mouse, but the light blue on the bottom, that's your appreciation. So this is assuming a 5% appreciation rate. That's pretty standard across Colorado. It's a strong appreciation rate. So cool thing about appreciation is that it's compounding. So it's if you buy a home for $500,000 and there's 5% appreciation, you're not tapped out at just 5% off of $500,000. Every year, that 5% is taken off of your new basis. So in 2025, you're looking at $525,000 and your home will appreciate 5% of that. So it compounds over time, and over 10 years, at 5% appreciation, the value of your home will have increased by $314,000, and you didn't even do anything. So that alone is super powerful. And then there's principal pay down. So the amount that you're contributing to your principal and your mortgage payment, that's that blue, the darker blue above the light blue number. That's showing how much you're paying toward your principal each year. You'll see that every year you contribute more toward your principal. That's just how the amortization schedules work. Yeah, so over 10 years, there's two down payment options here. I'm just going to focus on the 20% down option. The principal pay down would be about $65,000. So without doing anything to the property, just buying and holding it for 10 years, you've already increased the value of your home by like just under $400,000. So that's pretty powerful. And then this also takes into account if this were an investment property. So if you're renting it out, and this is with long-term rents, and short-term rents are much higher. So this is pretty conservative, but say over 10 years, you accumulate $88,000 of cash flow. So over 10 years, your potential wealth growth on a $500,000 purchase is $467,000. And you bought the property for $500,000. So it's like getting close to doubling your investment, which is pretty amazing. So like I said, a lot of our investors will focus solely on cash flow and look at a very narrow, I guess just look at the investment with a very narrow mindset of like just right now, a short-term mindset. But if you don't even take into account renting the property and cash flowing, buying and holding a property is always going to be worth it. So yeah, love to go back to the fundamentals of real estate from time to time. So benefits of using home equity for investment. So you have access to cash for down payments or a full property purchase if you want to buy something else. You don't always have to dip into your savings or something like that. You can access your equity to get cash to do that. Reduce reliance on other funding sources. That's what I was just saying, personal savings, traditional loans. A lot of times there's lower interest rates compared to other loan options, especially if you are taking like a HELOC on your primary residence or something like that. There's also interest-only options. So there's ways to leverage that. And then if this last one is specific to if you have an investment property and you want to buy an investment property, but if you have an investment property and you're building equity in that home, if you sell that one and buy another one, you can defer your capital gains tax. And so you can purchase a new property without having to pay any taxes on the profit from the sale of the previous one. So pretty cool stuff. Okay. Options to actually leverage your home equity. So the first one is probably the most commonly used one. This would be a home equity line of credit or a HELOC. Essentially, you're borrowing against your equity and using your home as collateral. So borrowing against your equity, which is the home's value minus the amount you owe on the primary mortgage. You can usually borrow up to 85% of your equity, though this varies by lender. It also varies on, is it your primary residence? Is it an investment property? But yeah, it's essentially borrowing against your equity in the home. You can draw from a home equity line of credit and repay all or some of it monthly like a credit card until your repayment period starts. And then when you're shopping around for a loan, borrowing from the equity in your home will often get you the best rate. So this is super commonly used. It's essentially taking a second mortgage of sorts on your home, and then using that line of credit toward either a renovation or a down payment or something like that. Okay, second one would be a cash out refinance. So this is taking a completely new mortgage, not a second one, it's a completely new mortgage on your primary residence. I guess it doesn't have to be your primary residence, but taking a new mortgage on the property. So you use the proceeds to pay off your existing mortgage, and then you receive the remaining funds as cash. So it's just money in your pocket. This is a good option when you've built significant equity in the home. So if you've held the home for a long time, maybe you've lived in it for like 10, 20 years, or if you've done major renovations and forced some appreciation that way. It can be a great tool to refinance the home and pull that cash out that a lot of times you put in. So a lot of like flippers or BRRRR investors will use cash out refis to pull their investment back out of that property and use it for something else. Something to note here is the interest rate environment at the time. So like if you bought the property at 3% interest rate and now interest rates are at 7%, you'd want to run the numbers and make sure that it still makes sense for you to do that because your monthly payment will be a good bit higher than it was. But super effective strategy to pull out money, especially if you have forced some appreciation. And so with the last one, with a cash out refi, the profits that you make from that refinance, you're taxed on that as income. If you want to avoid being taxed on the profit from your selling your property, you can use a 1031 exchange, which is a really cool option. This is specific to investment properties. So if you have an investment property, that has been building equity for some time, you can sell that property and purchase a similar property, or which would just be another investment property. And there's lots of criteria that a 1031 exchange intermediary can lay out for you. But essentially, it's taking that equity, selling it, putting it into a new property, and the gains from that sale you're not taxed on. So great option when you have an existing investment property that you want to get rid of and upgrade for something better. There's also the reverse 1031 exchange, which a lot of people don't know a lot about, but it's a really cool tool. I just had clients use this one a few times. And it's basically, you have the same motivations as a typical 1031 exchange. And it's in most ways the same as a traditional 1031. Only difference is that you buy the new property before you sell the one that you're wanting to get rid of. So I had clients recently who wanted to do a 1031 exchange, but they found this deal that they were like, we need to buy this, we can't pass this up. So they talked to their 1031 exchange intermediary company and they were like, hey, we need to pounce on this deal. What can we do? And so they did a reverse 1031 where they purchase the property, the 1031 exchange company holds the property while you sell the one that you're trying to get rid of. It's the same time frame as a typical 1031 exchange, so those restraints apply, the 180-day time frame and all of that. But it's a little more expensive than a typical 1031, but a great tool to take advantage of. If the right deal comes along, you just can't pass it up. Okay, so we're going to go through the process of leveraging equity for investment, but before I go through these steps, I think it's a good time to take a pause and think for yourself,
you guys eat your
own situation. So think, where am I sitting on equity right now? Is it a primary residence that you've done major renovations to, that you've just held for a long time? Is it an investment property that's just kind of been sitting there for you for a while? Think about where you might be sitting on some equity right now. And then think about what your goals are in your real estate portfolio.
You know where the books are on this couch?
Do you have like a mediocre performing investment property that you've held for several years and it's not really doing much for you? You're not super excited about it. Maybe it's in another state where you don't want to manage anymore. Do you want to get rid of that one and level it up into something that's actually going to cash flow for you or is closer to where you are management wise? Are you in a primary home and you've done renovations or you've held it for a while, and you want a vacation home? You want to buy something in the mountains for your family to enjoy, but you don't want to dump your savings into the purchase of a vacation home. So that might be interesting to look at the equity that you have in the home that you live in and see if you might be able to tap into that to have it buy your next vacation home. Or is it just an investment property that you want? You've been in your home for a while, you have equity and you're tired of sitting on it and you want to put it to work for you. Maybe that's the option for you. So think about what you have and what your goals are. And then as I go through these steps, think about how it can be applied to you and maybe what your next step may be. So step one would be to determine your equity. Again, if you need help deciphering or determining the current market value of your home, reach out to me and I'm happy to do that for you. Step 2 is get pre-approved for financing. And so do you need a contact for a HELOC lender or just a traditional lender? Do you need a contact for a 1031 exchange intermediary? If you need either of those, shoot me an email with that in the subject heading, like 1031 exchange intermediary referral or something, and I can send some great people to you. Step 3 is to identify and evaluate investment properties. So this is where someone like me would enter and help you understand where your equity is actually going to work the hardest for you. So maybe you want a short-term rental. We'll help you understand where you can legally short-term rental, what that looks like. If you want a long-term rental, there's rules surrounding that as well. Revenue projections, what you can actually expect to make on this new property that you're purchasing. All that good stuff. There's a lot to know, and it's kind of, changing all the time. It varies by county. So that's something that someone like me could help you with. And then finalize your financing and make the purchase. So those would be the quick and dirty, very high level overview of the steps to take advantage of this. And then the last thing I wanted to share an example that I thought was kind of a unique use of this. So I've kind of laid out a couple scenarios of how you could utilize your equity in your home. But I thought a client of ours did this. This is a true story, but we're just using the name Bob for now. Everyone say hello to Bob. But it's a really wise use of equity. And so I wanted to share that. So Bob had the money for a down payment on a short-term rental investment property, but he didn't have the cash to furnish and renovate it to reach its full potential. So if you know anything about the short-term rental space, it is a little bit survival of the fittest right now. So there's a lot more short-term rentals in the market than there were several years ago. And so really only the properties that are really well designed, have great photos, great furniture, they're managed professionally. Those are the properties that are really seeing awesome returns right now. And then there's this like mediocre middle that's just kind of like not that pretty, not that unique, has nothing special about it. And those short-term rentals are suffering. We pride ourselves on the fact that the vast majority of our clients are in the top 10% of short-term rentals in their market. And so we give you the resources to be able to achieve that status. And Bob understands that. But Bob is like, man, I have money for the down payment, but I don't have the money to make this property into what I know it needs to look like to achieve the revenue marks that I'm trying to hit. So, but Bob said, I have equity in my home that I've been living in for 10 years. So here's what Bob did. He took out a $90,000 HELOC on his primary residence. He did, I think it was an interest-only loan. It was like a high interest rate of like 13% or something, but it was interest only. So his payment was about $900 a month. Bob then bought the property, funded the down payment himself, and then used the HELOC to renovate and furnish the property to be the best short-term rental in the area. And it really, truly is. It stands out among his mountain market as like the best furnished, best photographed property in the area. This property now generates between 150 to 180K in gross revenue annually, and it cash flows about $80,000 a year. This is one of our top performing clients across the state. So I wouldn't say these numbers are average at all for anybody, but it's really a top performing short-term rental in the state. I guess I say in the state. I exclude mountain towns.
Thank you.
Exclude ski towns because those can hit some crazy
I
numbers.
know. Happy holidays.
Metro and like the foothill towns. This is the top.
I know. Well,
so cash flowing $80,000 a year. Bob paid off the HELOC in a year and a half through cash flow. So I think, let's see, $900 a month for a year and a half. So that's what, just over $16,000 that Bob paid to use this HELOC. I paid it off in a year and a half, and now is going to be cash flowing about $80,000 a year for the foreseeable future. So pretty powerful. I think this is a really cool use of equity. So yeah, wanted to share that example. I also just realized my volume has been off this whole time. So if you have been trying to ask me a question, I'm so sorry. Okay. So that's all of the meat and potatoes that I have for you guys today. This is my contact information here. Feel free to reach out to me. This QR code is to my calendar link. My phone number's here, my email's here. I'm also going to go ahead and repost it in the chat. But yeah, would love to connect with you guys. Also, like I was saying, if you have a specific need for a specific vendor, like a HELOC lender, 1031 exchange person, if you want that property valuation, reach out to me for those things and I'm happy to help. And then wanted to mention a couple other resources that are super cool. So our brokerage just launched this a course. It's called Short-Term Rental Pro. It has over 60 videos, 5 hours of comprehensive content, downloadable guides, tax strategy calculators, furniture discounts, software tutorials. It's like a Facebook group of support people who are asking each other questions and trading resources. So this course covers literally everything that you could think of when it comes to
I think that
short-term.
like once you get to a certain point, then you can do what they maintenance
And
dose,
so
like a low dose, like a microdose.
guys, can you all make sure that you are on mute? And if that's been happening the whole time, I'm so sorry. I didn't even realize. Anyway, this covers everything that you'll need to know about short-term rental. It's usually $999. I have a code, it's just my name, Alexa. If you use that, you can get 50% off. QR code is here, or if you want the link, shoot me a message. We also have an awesome podcast called BNB Financially Free. This covers all things investing, from taxes to boutique hotels to house hacking to anything you could think of. Glamp grounds. Our podcast covers it all. And then here is just some contact information for the brokerage, or some social media handles for the brokerage, as well as myself. So that is all that I have for you guys today. If you have any questions at all, definitely reach out. I am here to be a resource for you. So any way that I can help, whether it's answering questions or providing actual resources to you, I'm happy to do that. But thank you guys so much for spending a chunk of your, what is today? Your Thursday with me. Happy holidays to you all and happy investing. Have a great rest of your day.
So what is it?